Hello, everybody. I'm Rhett Doolittle. I'm CEO and Chairman of BZWR Corporation, stock ticker BZWR. So happy to be sharing the last year's results with you guys, where we are today, and really where we're going forward. We invited all of our existing shareholders, as well as just open this up to the public, hopefully to entice more people to be buying our stock as well. But happy to be talking to you guys today. So let's just get right into it. Oh, having a little click error there. There we go. So, the first thing I would say, actually, before I even get into the safe harbor agreement, is the past year. This is my first year running a public company as CEO, and yeah, it's been different. But there's always this stigma of taking your private company and going public. It's going to cost more. It's going to spend so much more time with attorneys, so many more hours. And really, yeah, those all those things were definitely a consideration, but it hasn't been nearly as bad. Where I've come and the comfort level that I have now, a year in of running a public company, is tenfold. I'm very comfortable. It wasn't nearly as bad. There really shouldn't be as big of a stigma of running a public company as there is. We're happy that we made the decision. We're here now, and we're happy with our plan going forward. So we're a year in. My entire organization is used to it. We know how investor relations works. We are definitely comfortable with our trading volume and how that reacts to different messaging and things that we can do in the market. So we're really happy with our first year as being a public company and me running a public company. So let's get started. We always have to include the safe harbor language. What I'm going to be talking about, it does include some facts in the past, but then there's a lot of forward-looking statements. These are statements that are my goals, the team's goals, and projections that we make based on our performance, our current performance, and our best estimate on how we're going to perform going forward. These are not factual basis, so you guys have to take that into consideration as you're making investment decisions in our stock and really any public stock. What are we going to cover today? First of all, I always love our little business warrior guy there on the right. So it's always entertaining to see him. I'm going to do a little company overview. Some of you aren't familiar with what we do or why we do it, what problem we're solving in the market. We'll do a review of the past year, financials and performance, where we are as far as the life cycle of our business, where we are today and where we're headed. And then the current market opportunity, the growth of that market opportunity, our financing and investor relations efforts in the past and going forward, update on our product development. Sales and operations always is critical to every company. And then we also have a cool announcement at the end. We're not open to questions during the call, but you can email us now or anytime at investors@businesswarrior.com. If we see repeated questions or something we think that we should answer publicly, we'll share those questions and our answer publicly as well. Otherwise, we'll definitely email you back and let you know what we can cover. So what do we do? Business Warrior helps small businesses simplify and prioritize daily decisions to get more customers and improve profitability. Guys, this is one of the biggest problems that every business faces. How do I get more new customers? And that's what we focus on. We focus on that with our software, with our solutions, our paid solutions, and everything else going forward. But what makes us different is everybody's trying to solve that problem. There's a ton of businesses out there that have a bunch of fancy data and dashboards out there, but it doesn't drive actions from the business owner. Our software really drives the action from the business owner, gets them to do something, simplifies all that data, simplifies marketing, makes all this stuff that's really, really complicated out in the world, simplifies it down, and then gets them to take action. Not only that, but then we track that action against their results so that we can prioritize what they should be doing first, what they should be doing last, and what's not important. This is having a ton of success for us. It really makes us stand out differently. And we have all kinds of cool things that we're building in the future that's going to drive this action from a business owner. It's very simple, it's actionable, and it gets results for the small business owner quickly. Where are we as a business? So prior to merging and becoming a public company, we had our previous operating model, which operated under the name Bloom, had, we were licensing different software products, testing other companies' solutions, reselling those solutions, having a marketing agency. And yes, while we had a successful, profitable business doing, over $1 million a year, that was nice. And we could have kept that business. We could have grown that to, $2 million a year and had a great lifestyle business. And that would have been okay. But that's not why we built this company. That's not why I'm doing this. Not why my team is in this. We're here to really solve this problem, solve the problem for small businesses in the United States, to make it easier to get more customers. The tools are out there, but they just haven't been available. They've been too expensive, too complicated, and we're going to solve that problem. We are solving that problem. Additionally, even though we were doing $1 million a year in the previous model, we didn't own our software. It wasn't scalable. The profit margins weren't as great as they are now. And we just, there was a dead end to that model. So we made a shift. We made that shift, started doing that about 18 months ago. And what we've been able to accomplish in that 18 months has been extraordinary. We've built our own software development team. We have a really unique model where we have really smart, high-level, US-based engineers that handle all the high-level software dev planning and everything else. And then we sub out offshore to India a lot of that grunt dev work, daily stuff that needs to be done. It's a really nice mixture to have really high talent in the United States and take advantage of that, while then also taking advantage of the cost benefits of having a dev team offshore. We're able to put out a software product very quickly that is highly valuable, high quality, and then pass that cost savings on to our customers so that we can offer a low-cost solution to our subscribers. This model has been working great, and we're only going to expand that further. We have a direct to the end user, to the small business model today. It's highly scalable. Now that we've built our own software, we own it, which means we have maximum enterprise value. It's much more scalable. We control the user experience, and we're off to the races. We're ecstatic. So in that 18 months, we built our own software development team when we had none. Now we have a dev team in India and the United States. We launched that software. We grew it to over 3,000 subscribers on that software. Then we launched our paid programs, and we're able to now convert free subscribers into paid. So we've come a long way in the last year, and now we're really ready to just take off in 2021. That shift that I was talking about in the previous model, yes, we were doing $1 million a year, and you're going to see in our financials in a little bit that we went down to just under 400,000 in a year, but we weathered that storm. It's over. So that's nice. We made the shift from a software, licensing platform, white labeling something, to our 100% owned platform, and now we're growing month over month. So that's over. We're looking forward. We weathered the storm, and it's only up from here. So what did we do in the last year? Well, we went public through a triangular reverse merger, January 31st. In that transaction, the executives eliminated over $500,000 in debt to strengthen the balance sheet. We were able to get 50 million shares that were previously issued back to the company treasury. We completed a 3A10, which eliminated $85,000 of our debt. Again, all of those shares have been sold. It's over with. We know that, our stock took a hit because of that. Part of our learning lessons as a CEO, that 3A10 definitely had a negative impact, it looks like, on our stock price, but we're through that. It's gone. We've weathered that storm as well. We were able to raise over $265,000 of friendly capital. These are long-term investors. These are personal friends of myself and my partners that we've brought in. These are people that have been watching and doing business with me for years. Oh, my dog's going a little crazy. Sorry about that, guys. I'm working from home just like everybody else during COVID. So these are long-term investors. We're going to continue to grow this and get more capital and investment from these. These guys are not looking, even though their stock is restricted for 12 months, they're not looking to sell in 12 months. These guys want to hold it on for 2, 3, 4, 5 years and really see us skyrocket. So we're going to continue to raise additional friendly capital like that. Hold on one second here, guys. All right. Weathered that storm with the dog too now. So weathering storms all over the place. Maybe not. Major product enhancements. We're a dev company. We are a SaaS company. So we're constantly looking at the product. Over here on the right, this is a software release that we just recently made. So if your dreams don't scare you, they're too small. So it's a little inspirational quote that we throw up as a new subscriber comes onto our platform. Really helps engagement, gets them in the right mindset, into a positive mindset as they're about to interact with our platform. And then we walk through some additional loading screens that teaches them what we're going to do for them. This has helped decrease our lead cost, increase engagement. We're constantly looking at ways that we can increase engagement, increase conversion from free to paid. And we're going to continue to make those enhancements immediately. We have stuff being developed now and all throughout 2021. So let's look a little snapshot at our financials. So year over year, yes, like I mentioned, we had a big decrease in our year over year total revenue. We went from over $1 million to $386,000. We knew this was going to happen. When I started the Bloom, 6 years ago, and we were testing all these things, that was our research and development stage. We knew this was going to happen. I knew eventually we were going to have to we're going to outgrow that and build our own software. We did that. We made that switch. We weathered the storm. Not only that, but a lot of the clients, yes, there was a lot of clients. That model took a lot of overhead. It was different products that we didn't control. We got rid of all of that. We migrated all of the clients over to our new platform. That is done. We renewed our largest client to another 12 months and moved them to the new platform. Yes, as we moved and rewrote that contract with that client, yes, we decreased their gross revenue by 50%, but our cost per subscriber on that with that client also went way down. So our profitability went up. So we weathered that storm. Everybody's migrated to the new platform. There's nothing left of the old. We have actually also grown. We're now growing month over month total revenue. So it's only going to go up for here. And that's over. Cash flows. Where are cash flows coming? Where are they going to come from in the future? As I said, sales are going to continue to grow from here. Our cash flows are going to come from increase in sales and additional investment capital from those friendlies that I talked about. All of our costs, if you compare us as a SaaS company, to other SaaS companies out there, our costs are extremely low to companies in our stage. Our results are high and our costs are super low. We have this unique development model between India and the United States, and our advertising is outperforming, and then our operations is just hitting on all cylinders. Really, with this new model, guys, we're bigger than we ever could be. We're more scalable. We have full control of the user experience, the product. And the best thing is we have maximum enterprise value. When we were reselling somebody else's product, that's not our product. That's not our IP. Now it is. So we're really set up to go forward in the future. So since that merger in January, what's happened? Well, we've proven our major key performance indicators in the financial model. Our lead cost is outperforming competitors. It's hitting right where we need to be to make this model scalable. Our sales closing ratio right now is actually a 50%. So of the appointments that get booked with our salespeople, we're closing 50% of those appointments. Now, is that am I building a model on a 50% closing ratio? No way. But that's why I put 35 to 50%. That's where we range. And I build the model even lower than that. So we're just outperforming right now. This is going to normalize as we scale and we get bigger and we add more management and more staff. This is going to normalize. But right now, everything just looks really solid. The demand for upgrades to paid plans has been good since we launched the platform. We continue to make upgrades to meet that demand. And that's how we build product, is we see what our subscribers want and we go build it, launch it, test it. It's really pretty simple. Our cost per new subscriber has decreased by 50% as well. Obviously, as a SaaS model, the cost it takes for us to acquire a new subscriber is one of our major factors. So the fact that we've been able to cut that down by 50% is huge. Our subscriber growth rate has increased by 129% since January. So what does that mean? That means in January, we acquired 161 new subscribers or free trial subscribers. In October, we got 368. That's great. Not only that, where does the 50% come from? The decrease in cost. Well, in September, we got over 350 new subscribers as well, but it cost us double as much as it did to get over 350 in October. So same amount of subscribers, actually a slight increase, half as much spend. We're tracking everywhere we want to be right now. Lead cost, closing ratio, demand on the platform. Things are just looking really, really solid. Our marketplace. So our marketplace is the first way, the first of a few in our plan, but the first one that we launched the marketplace on July 15th of 2020. The marketplace was the first way that we're going to convert those free subscribers to paid programs. This is a major revenue bucket for us. That has grown since July every single month consistently till now. So what is that, 4 months in a row? And our performance for those clients, so the people that do upgrade, our performance for those clients is performing 200% better than industry. So if you look at those individual products on our marketplace, whether it's marketing or website, SEO, some of these different products that we have within the platform, and you compare to similar products out there in the market, we're 200% better than the competition. That's why these products are growing. And that's why, the engagement side, that's why our sales closing ratio is high. So things are really looking solid as we go into 2021. Well, let's look at the market opportunity. Guys, we know COVID's happening right now. So everybody's like, oh, well, how is this affecting small businesses? Do they all need payroll protection money? How are they going to survive? Well, the first thing is look at the graph here on the left. This is new businesses being created or applications that have been submitted to the government. This data is coming from The Economist, which they got from the Department of Commerce. So you look at this, you see that huge spike right here is just insane. That is the number of new businesses that have been created recently since COVID. As people, this is the time, and this isn't just new businesses like people are looking for a tax write-off or trying to, get some PPP money, or, working from home and just, a single owner entrepreneur. This is a high propensity that they're going to actually hire other people. This is our target market. This is multiple employees, having 2 to 25 employees, looking to be in business for years to come. So the amount of new businesses being created because of the pandemic is extremely high. And not only that, but as new businesses are created, they need low-cost solutions, and they need low-cost solutions to help them get new customers. That is exactly what we've built. They need to focus on their business and launching everything else. Let us, provide low-cost solutions to do everything else for you. And so what we're doing couldn't be more perfect for the time that we're in, helping the market, solving a problem, and doing high value and providing high value services for low cost. We've also seen an extreme rise in spending since COVID hit. So obviously it took a huge tank. And since then we've looked at studies and spending is on the rise. We commissioned our own poll recently to poll 500 small business owners that have employees from 2 to 25 employees. The majority have been in business over 5 years, our exact target market. And we're going to include a couple of those stats in here. But one of them is we asked them, how much are they actually working on in their business now? Are they ignoring it because they're worried about COVID, or what are they doing? They're actually working more in their business, they said, than they ever have. So what a perfect time to improve on everything that our platform is telling them to do. What a better time when they're looking to take more action in their business to follow the actions that we're telling them. We also asked them if they're going to survive without payroll protection money. The majority did say that they're going to survive. They didn't say it was going to be easy. Actually, the number one answer is they said that they would survive without payroll protection money, but it was going to be tight. Again, that's perfect. That's what we want. They're going to survive. They know they need to get new customers, but they don't have huge budgets. That matches the solution that we have in the market today and the new solutions that we have coming. Let's be honest. I think our stock right now is at, 1.9 cents a share. It's not where I wanted to be when, we went public in January, COVID hit and everything else, learning 3A10, obviously affected us, but we're through that. We're through the storm on a lot of this stuff. We know what it takes. We haven't spent a lot of money on investor relations. That's going to change as we're scaling, and we're at And we've built a product, we've released it, we're ready to scale up our product to small business owners. We're also ready to scale up, our investor relations, everything else. That's all coming in 2021. We've weathered the storm. We're here now. We're in a great spot. Would I like the stock to be higher? Of course, every CEO always wants the stock higher, but we're in a great place right now. We've raised a lot of capital through our friendly past. We're going to continue to do that. We also plan on starting a financial audit in the first quarter of 2021. After that, we should be clear to uplist to OTCQB. There's obviously a lot of things we have to accomplish between now and then, but that's the plan as of right now. Additionally, we have a plan that I'm going to talk to you about in a minute at the end of our presentation here today about how we're going to keep our stock at the top of the mind of small business owners. One of the things that we realized is in that survey, that poll that I told you about a minute ago, 34% of that 500 small business owners actually own a publicly traded stock other than what's in their 401k or their IRA or any retirement portfolio. So these small business owners are investing in publicly traded companies. What a great opportunity for us being servicing these small business owners and having a publicly traded stock. So I'll talk about that at the end here. So stick around. Where are we at with product development? We have several new enhancements being made currently right now to our software platform, and we have new products in development. In fact, we have a big dev cycle finishing up, which we have a release coming in January, which Jonathan, my business partner and president of the company, is going to talk about in a second. But we just released, I showed you some screens a second ago about the sign-up experience, which is onboarding. Our sign-up experience is improving immensely. In fact, right now, our average time to sign up, these small business owners can get a ton of data about their business in a matter of minutes. Our average time to get all this data is around 5 minutes. That's going to be under a minute here in a couple months, actually. Engagement's going to go up. Our increase in conversion from free to paid has gone up since we launched in July, and it's continued to go up. This is what we're focusing our product development up. We want to increase conversion, increase obviously more paid subscribers, increase engagement, decrease the time of new signups, and offer new low-cost solutions to match what the market needs today. We're going to continue to expand on the successful products that I just told you about, as always, and we're going to need to expand our dev team in the United States and India. Here's that hockey stick growth that every company wants. We're doing it, guys. Not only that, but the recent improvements that we've had in our lead cost, as we ramp up our advertising spend, that hockey stick's going to only go up. If you look at that blue line between July and October, we didn't change our spend there. However, in November, we're going to double the rate that we're at right now. We're going to double the amount of subscribers with the same amount of spend. So things are looking really, really solid. We're going to see that hockey stick growth on new subscribers. Our lead cost is going to continue to go down, and we're in a really good place. I'm going to hand this over for a couple of minutes to my partner, Jonathan Brooks. He's the president. He runs sales and operations. Many of you know him because he communicates with investors often. And before I think he kicks in, we're going to show you a little video about that we're doing, and also a sample of what we're doing for our clients. So here you go. Off to you, Jonathan.
All right, thank you, everybody. So today, I'm really excited to share some of the amazing results that our marketing and sales team have done. We've got a great group of team members that work tirelessly every single day to make sure that we deliver the right message, we support the subscribers, and at the end of the day, get small businesses more customers. And that all starts with how we do our scalable formula for marketing. So we are a really metric-driven marketing or a team. And why do we go about it that way? Well, particularly as a SaaS company, you're constantly facing new obstacles. Those obstacles can come in the form of higher cost per lead, can come in new competitors. All of that, Business Warrior has the team to make sure that we're always evolving in the best spot for not only subscribers, but also for our shareholders. And so what we're looking at here on the far right is this is our cost per lead. And where we've really just been able to just beat industry standards consistently, we're at about 3 times better for our cost per lead on getting new subscribers and acquiring new customers than industry average. So what does that mean? It means that for every $10,000 that we spend, we actually get 550 free subscribers. But the good news is, as you see that trend line going down in November, now we actually, for every $10,000 we spend, we get 667 new subscribers. So as Rhett mentioned, we continue to get better with the way that we are performing for our marketing. And what this is going to look like in the very near future is just an unbelievable integrated approach, which I'm going to show on the next slide. All of this is measured, though, at the way that we think about our CRM system. And that's really one of our unique sauces that we have as a company. We really look everything from the stage of a subscriber coming on as a free trial to the engagement that they have with our team. And then at the end of the day, making sure that they're upgrading to a premium subscription, all done through the CRM. So what we're really able to do is connect a one-to-one relationship on how much money we spend versus what that customer comes on as a subscriber, and then take them through the customer journey to make sure that they're always happy and satisfied. Right, next slide, please. So marketing evolution is continuing to happen with us. We're seeing fully integrated campaigns across Google and Facebook. What this looks like is no matter where the subscriber potentially finds us, whether it's from our advertising campaigns or our press releases, we're able to connect the experience across all the platforms so that we know whether we're nurturing them from a time that they first hear about Business Warrior to the time that they sign up, they're always going to continue to get message and we're staying top of mind. And we're doing this through the advent of video advertising with us. So through the video advertising, we're really able to step up our game for how we as a growing company can make sure that we're getting to as many possible subscribers as there are. And so the video advertising that you just saw Rhett played, we're going to continue to grow that out as a way that we communicate our message, but make sure that all small business owners know we're the source for small business. And then we're going to continue to build out customer testimonials. Our customers and our subscribers, they're loving us. And so what we want to do is we want to shift and continue to show exactly how well we're doing and how those results are coming through. Rhett mentioned we're performing 200% better for our subscribers. And that is just a stat that is just really a joyful experience for small business owners as they try to reopen and figure out what do they do and how do they approach getting more customers. And we're here for them. Next slide, Rhett. So how do we generate revenue? There are 3 buckets. Our marketplace revenue is doing extremely well. In just the short 4 months that we've launched Marketplace, we're up 127% from that category. Our SaaS product, we're launching a brand new product that Rhett mentioned in early January of 2021. This product is specifically going to go after market share from major competitors. We're going to come in at a low price point that has unbelievable value to a small business owner that drives real action. All of that done from the way that we are continuing to build out our infrastructure and make our product even easier to use. And then the last bucket is resellers. Resellers is one of those where this is how we built up our former subsidiary into such a good and growing $1 billion company, was through reseller platforms. So what we've been able to do is accommodate now the fact that we own Business Warrior and we own that technology, we're able to make it even easier for you to become a reseller. And then at that point in time, really make sure that the referrals you're giving us are happy and satisfied. That's why our reseller monthly recurring revenue, we're up 160% from those referrals. So our average revenue per subscriber is $305. I'll say right now that with the advent of the new product launch in January, this average revenue per subscriber is not going to stay at $305 because the model is actually going to be able to show us that we can get more subscriptions, convert more small businesses onto our platform when we come out with that low price product in January. So you're going to see average revenue per subscriber drop a little bit, but rest assured, it's all a market share play. We want to make sure that Business Warrior is in every single small business in America. Brett, next slide, please. And so through that reseller network, this is our growing pipeline of business development. Just in 6 months, we've signed on 7 new resellers. They have 100,000 small businesses as prospects. that is a great channel for us to continue to grow out. And of those referrals that are coming through these resellers, they're representing 25% of our monthly recurring revenue. And for those customers that do come in, those subscribers that come on as referrals, we're seeing a higher revenue per subscriber. So all of this is just a really good formula for us to continue to make sure that, yes, our end model is making sure that we are one-to-one with the merchant and that we sell directly to them. But resellers and our partner networks will continue to be a nice cherry on top for us as we grow our business. So some of the key partnerships and development. During COVID, we really were able to strike a very strong relationship with a lot of local and statewide programs. So a lot of municipalities actually reference BZWR as the go-to source for small business owners. So we're going to continue to foster that relationship and now expand that across the US. We're also going to be looking at expanding a tried and true way that Rhett made reference to his former successes in the credit card processing industry. You know, this is an industry that is ripe for disruption, but ripe for the right disruption, because that is all around how do we actually deliver value to the merchants? How do we, instead of just giving over a credit card transaction, how do we make that small business really get more customers? And that's going to be through BZWR. So we're really excited about those relationships. We're going to continue to grow in the niche industries. You know, we have a really strong success with a lash artist based in Scottsdale, Arizona. You know, that relationship started from one of our partners having a friendship with her. And it just has fostered into such a good way and a good example of somebody who has a really strong social media following. How can our two companies come together in a synergistic way to make sure that there's some win-wins in there? So we're going to continue to grow on our niche industries. And then what this really opened up was the idea of vertical industries. And that's where I'll just end off before I toss it back to Rhett. Our vertical industries are really going to be those that have large amount of small businesses under their wing. So things like insurance companies, accounting, and car services. All of these partnerships are continuing to grow in our pipeline. And I know that with the wonderful work that we have from our technology and our customer success team, we're really setting ourselves up for some pretty massive growth. Rhett, back to you.
And one thing, guys, I forgot we didn't mention is this 127% growth. That's month over month. That's September to October, 160% on reseller. So this is big month over month numbers. That's what I mean. We've weathered the storm, and so month over month growth is just really looking solid from here going forward. Thanks, JB. So I'll tell you guys a little story. So I was talking to one of our subscribers not too long ago, and he's based in Reno, Nevada. And, you know, he's having a great experience, and he's telling me about how he's using the platform to grow his business. And, you know, he doubled his revenue in 6 months, and it was a great story. And then he said, "Hey, I saw on your Instagram page," because he follows me personally, "that you guys are public." It's like, "Yeah." He's like, "How do I buy your stock?" And so I had that realization, like, oh man, like, yeah, this is another one of the major reasons, obviously, that we're public, is that all of our subscribers and clients have an opportunity to buy our stock. So, you know, but also, like, how do we communicate with them? Well, we're doing this now. We're launching this now. So this is coming. We're using our own products and solutions that we use for our clients, for ourselves. Yes, we're a user too. So these ads that you're seeing on the right, these are retargeting ads. So if you've ever, like, say you're going on to Nike and you're thinking about buying some new running shoes, and you go on to Nike.com and you look at some shoes, and whatever happens, you get distracted, you don't buy the shoes. And then an hour later, you're, you know, reading a blog, and all of a sudden that ad for shoes pops up. Then the next day, you're like on Instagram or Facebook, you see the shoes again. They're staying top of mind with those shoes to remind you, hey, we're here. Do you want to buy us? Do you want to buy us? We're doing the same thing with stock. We're just trying to entice and remind all of our subscribers, our investors, our followers that we're here, we're public, and they can go buy our stock. We're staying top of mind with our engaged investors, and we want to really entice our existing subscriber base and anybody looking and following us into purchasing stock as well. This is just being launched now. So, you know, this is going to really help our investor relations going forward. As we scale the business, it's going to naturally scale, you know, our outreach to possible investors as well. So we're excited about that. That's going to be huge. I know a lot of businesses talk about, oh yeah, well, we could have our customers, our customers buy our stock too, but it never really comes to fruition. We have the tools to make this happen. That is just huge. This is one of the images we show them. So after they click, the retargeting ads, they're going to come here and then they can see exactly, okay, how do I buy their stock? Here's the platforms. Of course, we're Pink Sheets right now. We have a plan on upgrading to OTC QB in 2021. A lot of things need to happen between now and then. But for now, these are plenty of large platforms that our subscribers can buy the stock on. We're making it as easy as possible to just provide some education of them. And it's only going to get better in 2021 as we accomplish what we're doing. We're going to scale this company, continue to have additional product releases, scale advertising, and additionally scale our outreach on investor relations. We couldn't be more excited about where we are today, what we've been through the last year, and really where we're headed in 2021. I thank you guys for being investors, following us. I also wanted to let you know that, as 6 months ago, I wasn't very active on social media, but it's really a benefit for us as a company, for me to communicate with our investors, our customers, friends and family that are investors, and everything else. So please follow me on Twitter and Instagram at RetDo. I try to make public announcements on Twitter. I also, provide some insight on running a public company on my Instagram page and stories. So that'll help. We also have announcements. You'll never miss calls like this going forward. But again, just thank you for joining. We're stoked for 2021. I hope you guys are too. Got to get this country through the health crisis. But as we do, things are looking really great for the small business community and what we're doing for them. Again, if you have any questions, email us at investors@businesswarrior.com, and we'll get back to you as soon as we can. Thanks.